Okay, let's jump right into it. We're doing a deep dive today.
Yep.
We've got this stack of recent news articles, reports you shared, all focused on crypto.
Right.
Think of this as getting a direct download for you, like your personal briefing on what's making headlines. And this is all based specifically on info available as of today, May 22nd, 2025. Our mission. Basically, cut through the noise, pull out the important nuggets, the surprises, and just help you understand what's really driving things in crypto right now. So let's unpack this.
Agreed. And, there's real value in taking these different pieces, the market data, the regulatory stuff, project news, and sort of weaving them together. See the bigger picture. These sources, they give us a really current snapshot.
Okay, so let's start there. The overall picture, that CoinMarketCap data we looked at. It shows the global crypto market cap hit, what, $3.5 trillion?
That's right, $3.5 trillion.
And the headline, up over 4.5% in just the last day.
Yeah, and what's fascinating there is just seeing that kind of movement, across the entire market value in just 24 hours. It really points to a strong, broad, positive shift hitting everything.
And leading the charge. No surprise. Bitcoin.
Always.
Your data shows over the past day, BTC traded between $106,100 and $111,880.
Quite a range.
Yeah. And as of, let's see, 09:30 a.m. UTC today, it's sitting around $110,679. That's a solid 4.10% gain. It even poked above 111K earlier this morning.
Right, around 3.42 a.m. UTC. And if we connect this to the bigger financial world, the sources flag something pretty big. Bitcoin has now actually surpassed Amazon in global market value rankings.
Wow.
Yeah, that comparison alone, it tells you a lot about how its perceived significance is growing compared to huge established companies.
But it's not just Bitcoin moving.
No, definitely.
Most major cryptos are following, trading higher. Let's rattle off a few movers here from the data. Ethereum up over 6.5%, XRP gaining about 4.5%, BNB climbing 5.5%, Solana jumping over 7%.
Solana's having a good run.
Yeah. Dogecoin adding 8%, Cardano seeing a strong 8.3% rise, Tron up a couple percent, Trump gaining nearly 6%, WBTC moving with Bitcoin, naturally, and SUI posting a big 9% jump.
And within that, general upswing, we also saw specific mentions of some real standouts, like HA-Doll up 80%. 80, yeah. Lista up 51%. Cookie up 34%. It just reminds us that even when the whole market's moving, individual projects can still see these massive rapid spikes. Specific news, catalysts,
Right. Now, your sources also had the CoinMarketCap Altcoin Season Index. It stands at 26.
Yeah.
For people who track this, what's a score of 26 telling us right now?
Well, this index, it basically looks at how the top 100 altcoins are doing compared to Bitcoin. And a score of 26, that's pretty low. It's well below the usual threshold for what they call an altcoin season.
Okay.
So the takeaway is, despite those individual spikes we just mentioned, the HAGLs and Listas, the overall market momentum, it's still very much driven by Bitcoin. It's telling us it's firmly a Bitcoin season, according to this measure.
Got it. Okay, moving on from the pure market numbers. This is where it gets, I think, really interesting. The framework around crypto.
The rules of the road.
Exactly. Particularly in the U.S., we saw a few key things highlighted. First, U.S. House Majority Whip Tom Emmer and Representative Richie Torres. They've introduced the Blockchain Regulatory Certainty Act.
Yeah, this is potentially quite significant. This proposed bill, it aims to give some legal protection to blockchain developers and service providers. The core idea is shielding those who don't actually hold customer funds from being treated like, say, a bank holding deposits. Yeah. The goal seems to be clearer rules, trying to stop, potential government overreach that might stifle innovation on the tech side.
Makes sense. Another policy point that came up. A bill in Texas. They're apparently considering a state-controlled Bitcoin reserve, and it's nearing a final vote. And analysts and the sources thought this was positive.
Well, it signals this growing interest, maybe localized for now, but at a government level, in seeing Bitcoin not just as, an investment, but maybe a reserve asset. It raises questions, How might lawmakers start integrating digital assets into more traditional financial thinking, even state level for now?
Interesting. We also saw that the U.S. House Rules Committee approved President Trump's big tax cut bill, cleared it for a full House vote.
Right, and as reported in the sources, that approval happened. We're just conveying the information exactly as it was presented. Our role here is simply to report on the content you shared, not really to comment on the bill itself or its potential impacts, just laying out the facts from the sources.
Understood. And one last regulatory bit, NASDAQ. They've proposed a rule change for the iShares Ethereum Trust ETF.
Another step in the ETF saga.
Seems like it. Okay, so let's try and tie some of this together. We've got the surging market, these regulatory moves. What's actually driving the current rally? One analyst you shared, Lin Tran, pointed to favorable macro conditions and more institutional interest.
Yeah, and the sources specifically highlight the weakening U.S. dollar. That seems to be boosting Bitcoin's appeal as, an alternative store of value. We're seeing a clearer link, it feels like, between traditional macro things like currency strength and how major digital assets perform.
Let's look at some specific Bitcoin indicators from the data then. An analyst, Credible Crypto, noted Bitcoin's monthly RSI, that's the relative strength index.
Right, a momentum indicator.
Yeah, tracking price movement, speed, and change. It's apparently re-entered the overbought zone after being out for a few months.
And the sources recall that the last few times the monthly RSI hit this zone. Well, the monthly candle saw some big price increases afterward. They mentioned rises of like $22,200 and $33,000 in those months.
Wow.
So with Bitcoin already up around $18,000 this month and still, 10 days left in May, the data kind of hints we might be seeing a similar pattern start to unfold based purely on this technical indicator.
Another fascinating data point. This one's from CryptoQuant analyst Axel. He observed a huge drop in weekly trading volume for the BTC-USD pair on centralized exchanges, especially since the OLNA collapsed back in 2022, which, really shook the market.
Wow, a major event.
Volume apparently plummeted from a peak of 2.9 million in July 2022 down to just 426,000 in the most recent session they cited.
That's a massive reduction. And the insight there could be, less available supply being actively traded on these exchanges. If there's less selling pressure, maybe holders are less willing to sell. That can potentially add upward pressure on prices.
Makes sense.
The sources kind of link this volume decline to a possible long-term bullish signal, like holders are just holding.
Interesting. Okay, beyond the market-wide stuff, your sources also had updates on specific projects and platforms. For DYDX users, there's a really important deadline coming up.
Yeah, this is critical for them.
Over 64 million NTYDX tokens still need to be migrated to the new native DYDX chain.
And a community proposal, which got 91% support, has set June 9th, 2025. That's the date for an on-chain vote to basically shut down the old bridging contract from Ethereum.
So what does that mean for users?
It means, and this is the crucial insight, if you hold those old FDYDX tokens and you haven't migrated them by around that date, you could face restrictions, like potentially not being able to access or use your assets easily. It's a very specific, time-sensitive call to action. Migrate your tokens.
Got it. Okay, shifting to Ethereum itself, we saw data showing just dramatic volatility and profitability for ETH holders lately.
Yeah, really wild swings.
Sources noted that since December 2024, the percentage of profitable ETH addresses, it tanked from over 90% down to just 32% by April 2025.
Ouch.
But then it sharply rebounded to nearly 60% recently.
And the sources actually describe this level of fluctuation, this up and down in holder profitability, as unprecedented since 2017. It just highlights the sheer intensity, the speed of the price swings Ethereum's seen recently, impacting a huge chunk of its holders.
Wow. Then on the Ethos network, the community proposed a new way to handle reputation to prevent manipulation.
Exactly. The proposal aims for a more stable system, one that's harder to game, by activating reviews daily, in order, and only counting one review per user per day for reputation. The idea is to stop, a small group from artificially pumping up scores really fast.
Right.
Encouraging more organic, maybe more trustworthy reputation growth over time.
And some news for Binance Alpha users. Huma Finance, ticker HUMA, set for a first launch there. Trading opens May 26th, and there's mention of an exclusive airdrop.
Yeah, for eligible Alpha users. They can redeem Alpha points via some upcoming event page. It's a pretty classic example, right? New project leverages a specific platform, uses incentives like targeted airdrops linked to activity, all to build that initial buzz and user base.
Makes sense.
Right.
And even in the meme token world, WLFI reportedly bought its first meme token, specifically BioDollar, launched by 4. Meme on the BNB chain. And 4. Meme themselves commented, saying something like, as the USD1 ecosystem grows, we're seeing real builders choose real assets faster, deeper, and more decentralized.
So even within the meme space, you've got commentary framing these things as part of a shift towards real assets in DeFi. It's a specific detail, but it shows that narrative is even popping up in that often very speculative corner of the market.
And finally, just a quick security note. Blockchain security firm Slowmist put out an alert. Potential suspicious activities linked to the platform Nexo. No specifics in the sources, but the message was clear. Users should be vigilant.
Always good advice in this space. Stay vigilant.
Okay, let's zoom out a bit now and try to connect some of these crypto trends to the bigger picture in global finance.
Right, the macro connections.
Swissquote bank strategist Apek Ozkardskaya noted U.S. Treasury yields.
Yeah.
The key borrowing costs are influenced by two main things. One, U.S. fiscal health, debt plans. Two, whether global investors are willing to keep buying U.S. debt to finance it all.
Yeah, and the sources add that this willingness, this global investor appetite, it's being tested. They cite things like worsening international relations, maybe less enthusiasm for holding dollars, declining confidence in treasuries as the ultimate safe haven. All reasons why that crucial demand might be weakening, which, undermines confidence in the traditional government debt market.
And this ties directly into another major news piece in the sources. Japan's Norinchukin Bank, huge institution, reported a massive loss, about $12.6 billion for fiscal year 2024.
$12 billion.
Yeah, and a big reason. Selling U.S. treasuries and other foreign bonds. Their unrealized losses on bonds were huge, and apparently 20% of their portfolio was in CLO's collateralized loan obligations, complex debt stuff.
Right, and Arthur Hayes commented on this. He suggested that this kind of loss from a major global bank, it could make other big institutions hesitant to buy more U.S. treasuries themselves. The insight is, if a giant player like Norinchukin is getting out because of losses, it removes a significant potential buyer. That impacts demand, potentially pushes yields. And it's fascinating because you see this traditional finance action directly affecting government debt dynamics, which in turn could make alternative assets like Bitcoin, which we talked about earlier, benefiting from a weaker dollar narrative, seem potentially more attractive. It's all connected.
Wow. Okay, now, amidst all this market excitement, the regulatory talk, your sources also included a really stark, necessary reminder.
Yeah, the risks. They're always there.
The founder of a blockchain startup, Amalgam Capital Ventures, Jeremy Jordan Jones, he's been indicted by a U.S. grand jury.
And the indictment, announced just yesterday, May 21st, carries some very serious charges. We're talking wire fraud, securities fraud, lying to a bank, aggravated identity theft.
Whoa.
The core accusation is that he ripped off investors for over $1 million between early 2021 and late 2022.
And how did he allegedly do it? The sources said he pitched his company as this innovative startup. Point-of-sale systems, blockchain payments, even fake sports partnerships to get investment.
Right, but the sources stated it was basically a sham.
Okay.
And the critical insight here from the sources, instead of putting that investor money into tech or promised exchange listings, he allegedly just spent it on himself: luxury cars, vacations, fancy clothes, dinners.
Unbelievable.
He's also accused of faking a bank statement saying he had over $18 million when the account was closed just to get a company credit card. These charges, if proven, carry potentially severe prison time. It's just a powerful reminder. Vigilance, due diligence, absolutely critical when you're looking at new ventures, new people in this space.
A really important cautionary tale. Okay, almost wrapped up. Finally, a couple of quick notes from your sources about related tech, XAI, Elon Musk's AI company.
Grok.
Yeah. They've rolled out a live search API upgrade. Lets Grok do real-time searches on X, the internet, trending news. It's in beta, free for now.
And they also apparently addressed some speculation about them getting into prediction markets. Said they're enthusiastic about the idea, had some talks, but haven't confirmed any formal partnerships yet. That's according to the source.
Okay. Now, one last interesting little trend point. Despite Bitcoin hitting these big price highs we talked about, its popularity on Google Trends seems to be decreasing globally.
Less retail buzz, maybe?
Could be. Though El Salvador is noted as the region with the highest search interest, which makes sense given their Bitcoin adoption and reserves.
Interesting disconnect there. Price up, search trends down globally.
Okay, wow. We have really covered a ton of ground in this deep dive into your sources.
We really have.
We looked at the broad market surge, macro factors, institutional interest, explored key U.S. regulatory moves aiming for clarity, dug into specific Bitcoin indicators, touched on updates for DYDX, Ethereum, Ethos, Binance Alpha, considered those big shifts in traditional global finance and their impact.
And absorbed that very important cautionary tale about fraud. So what it all tells us, I think, is that the crypto space right now, It's just this incredibly complex ecosystem. It's influenced by this dynamic mix of tech progress, proposed government rules, powerful forces in traditional finance, and, individual actions and feelings.
So, bringing it all together then,
Yeah.
what does the snapshot really mean for you as someone trying to navigate this fast-moving environment?
Well, this leaves us with something important for you to consider, maybe mull over. When you see a market hitting these kinds of high values, right? $110 K Bitcoin, yet at the same time, you see maybe decreasing retail search interest, ongoing dramatic volatility in major assets like Ether. And crypto seems increasingly swayed by these external factors like US Treasury yields or bank stability issues. Is this the evidence? Is this the crypto market truly maturing, integrating into that broader global financial system? Or are these just the familiar old market cycles, just playing out this time on a much, much larger, more complex, more interconnected stage?
Something to think about. Keep exploring, keep asking questions, and we'll be right here, ready for the next deep dive into your sources.